So we are now going to invite on stage 3 investors, and they're going to share their market views. So moderated by our managing director, Oscar. So please give them a warm welcome. So Oscar will be moderating the panel, accompanied by Sacha, partner at Global Ventures. Welcome. Tushar, Deputy CEO and Head of Investment at Crescent Enterprises. And last but not least, Sharif, CEO at Dubai Future District Fund. So please give a warm round of applause and welcome.
Okay, good. As JD was saying, we're hearing about the startups. What do they think the world needs? Now let's have the perspective of the investors. Let's start with just a simple introduction. So for a minute, just let us know a bit about your background and your organizations. How are you investing right now? What are the regions, the industries, the ticket sizes? Okay, so Sacha, would you like to start?
Okay, cool. I'll just take this. Hi, everyone. I'm Sacha. I'm a partner at Global Ventures. Global Ventures is a Middle East Africa focused venture capital firm that's headquartered out of the UAE. We target Series A founders who are solving some of the biggest problems across our markets. And we're sector agnostic, but we like health tech, fintech, supply chain tech, agri-tech, some energy tech. And also B2B enterprise SaaS. So those are all the sectors we look at. We're 22 people based on the ground across the UAE, Saudi, Egypt, and Nigeria. But we have investments that cover a wider geography than that. Aside from that, my background is I'm a career investor. So I've never built a company like many of the founders in this room. But I have been very fortunate to have a lot of experience living in different markets. So I spent a chunk of my career living in Africa. And then I spent 4 years living in Latin America, and I had a short stint in Far East Asia as well. So I'd like to say I have a good sense of what's going on in the various emerging markets.
Hello. Hi, my name is Tushar. I represent Crescent Enterprises, which is a diversified business group headquartered here in the UAE. We have operating businesses in upstream oil and gas, sports and logistics, and we have 2 investment platforms, a private equity platform and a venture platform. Venture, we've been investing for the last 8 to 9 years. It's pretty broad, again, sector agnostic. We've done or do early stage, which is seed, Series A, out here in the region, India, Southeast Asia. US has been more early growth, I would say Series B to D, and it's been more enterprise software, deep tech, life sciences in the US. It's all proprietary capital, so we're deploying balance sheet capital really with a very long-term approach.
Hi, everyone. My name is Sharif. I'm the CEO of the Dubai Future District Fund. It's a sort of new fund set up by the Dubai government, backed by the DIFC here and the Dubai Future Foundation. They anchored the fund with $200 million. It's our starting point, and we divide the capital into 50% directly into startups, which we do pre-seed to Series C. And we do that across what we call 2 thematic pillars. The first one is future of finance, which is fintech, regtech, legal tech, horizontal themes like financial inclusion and embedded finance. And the other pillar we call future economies, which is kind of defined by how we see global economies changing between now and 2050, all the SDGs and the things that are expected to happen between now and then. So we want to go push the envelope on a lot deeper technology in these markets, but we're not ready for that yet. So we're starting with very light versions of that in what we call future of health, future of food, future of logistics, future of entertainment, education, security, and work. So 7 subverticals. And what we mean by future of, rather than just a buzzword, is future food. For example, we don't do food delivery. We don't do restaurant supply chains, but we do protein, lab-grown proteins. We do food sustainability, agri-tech, aquaponics, those kinds of things. Future of health, rather than being telemedicine or doctor booking apps or things like that, we're looking at genomic sequencing, precision medicine, lab-grown organs, things that are really coming on the horizon. And then we divide them by 3 horizons or return horizons. So a 7 to 10-year return horizon is what a VC would do in the private market. So we're first going after that. We can afford to do that because those things commercialize today. return in 7 to 10 years, but some things that are still in R&D today might commercialize in 4 or 5 years, and then they will return in 10 to 15 years. We're saving those as the next phase to go into. Two factors that will contribute to when we do that is when the environment around here supports more R&D and grants, which is happening by sister organizations in the government, and our capital base increasing, so we have that dry powder and patient capital to be able to do that. So all the winds are heading in the right direction because everything that seems to happen around the world continues to bring deeper talent into Dubai. So we see that the milestones are being hit, and soon we'll be able to do that. We also do 50% fund-to-fund investments, and we invest in incumbent regional funds, new and emerging fund managers across the MIASA region, which includes Africa to India. And third would be international funds that have a presence and investments here in Dubai. So that's the kind of summary of what the fund thesis is.
Thank you very much for the introduction. We have a good background here with like government, corporate, and more private VCs. Well, it's no secret right now that that VC and fundraising is tough. We're seeing numbers that share that everything is slow, that is complicated. But well, we have 3 funds here. They have capital. They're deploying. So what are you excited about? What are the key things? And if you can talk about a trend, like one single trend that you are very excited that you think is going to have a lot of potential, and that, well, that's where funders should start spending more time. So maybe Sharif, we can come back as we have to share the microphone.
Give the mic back. So we get asked these questions a lot of times, and I think right now is a much harder time for me to answer that question than in the last 10 years. Every couple years, it was like easy to identify trends. We identify trends by what we think are going to become markets or very fast growing markets, maybe that not everybody sees happening. The second is that investor interest or appetite increases in a certain area. So fintech was one of them, that a lot of investor interest in that area. But now I feel like it's really hard to answer that question, because you could say AI, but AI, which part of the Gartner hype curve is AI in right now? Definitely it's in the beginning of the hype curve. So we'll see where that lands. It was always an interesting technology anyway as a horizontal. So we'll see where those applications end up. We have made investments already from this fund in 2 AI companies we're very excited about. But I won't be able to answer it necessarily the same way as a private VC might answer, or private investors, because we also have what's on the national agenda, what's on the Dubai agenda, and the things that we are interested in seeing here. So we're interested in seeing, as I mentioned before, deeper technologies across all sectors. So deeper health laboratories. We're visiting, our team is visiting science labs in Dubai, which most people don't even know existed, and they're incredible. So we just, now that we're mapping actually what the base resources that the Emirate has, we're able to then match that to some of the interested startups we see landing here, or flying around here, and to be able to give them things that are actually more beneficial than capital, plus capital. So because I think most of us as investors would be hesitant to give capital in an area we don't think there's support, other types of support for them, and there's nothing better for a startup than revenue. So if they can have revenue, potential space, a network, a community that is doing similar things to what they're doing, it's a lot easier to deploy capital to it. So for us, that's been our focus. We're doing that across a number of areas, as I mentioned, and all of them to me are very exciting. But the headwinds against us, from a global economic point of view, the complete dry out of VC over the last, 18 months or 9 months, whatever it was. But like you mentioned, we do have dry powder here. So we intentionally press the gas on our fund-to-fund side. We're deploying faster than planned on fund-to-funds to get out into all the different types of flavors of funds across these vintages, because we think these are the best vintages to invest in. On the direct side, we've pulled back against plan. So we are slowing down because we always try to be conscious about a government, directly investing in startups too. Like, want to make sure it's doing it in a complementary way to the private market and not cannibalizing the efforts of the private market. So that we're very slow in thinking, and then when we find the right thing to invest in, we act fast on it. So we have probably 11, 12 deals, direct deals done. We should have been probably at 20 or something by now, just by plan. On the fund side, we thought we would be at maybe 8 funds. We're probably going to end June with 10 funds. So we're slightly ahead on the funds, but the funds come in all kinds of flavors and sizes and sector and geography focuses. So we feel like that diversification, at least they can then decide when they want to deploy that capital in the market. So that's kind of our focus areas. It's not probably the answer you were looking for, but it's how complicated things are right now for us.
It is an answer. It is an answer, and definitely the point of view of a government is very different. So, Tushar, what is the point of view of a corporate? Because it is true that governments have their own criteria for a successful investment, but in the case of corporate VCs, that's also part of the agenda. There's a business that is running, that is generating profit, and CVCs, besides thinking about potential profitability, they also have other objectives where they will say, "Oh, that was a good investment." So, what are you looking at right now? What is exciting for you?
Yeah, so I would say, of course, we continue to look at companies which have synergies with our operating businesses and where we clearly see the need, and we can, provide a playground, if you may, for companies to come in and experiment. And that's the best diligence we can do. We have POCs ongoing. We allow them to work with us, and then we go on to invest. So that's ongoing, but it's a broader mandate. It's not only strategic, we also make financial investments. And I'd say in terms of trends, I completely agree, of course. I would say it's a healthy reset. It was much needed. And I think, founders, companies, and investors are back to the basics, focusing on building sustainable businesses, which is very important. I think we all got carried away, and we're chasing growth for the heck of chasing growth, which had to come to a stop. And, the next few years, I believe, would be, one of the best vintages and a great opportunity to invest. So we continue to invest in, enterprise software, consumer, fintech, but focusing very much on identifying businesses that we see can be sustainable, if not profitable, a very clear path to profitability, businesses who are capital efficient, and of course, have that growth potential. On the futuristic side, we've been quite active in the life sciences space for the last 18 months. And we've done med devices, et cetera, in the past, but more therapeutics in specific areas. It's obviously a large space, but we've been active in genomics and gene editing. We were early investors in Prime Medicine, which went public a few months ago, and is one of the few companies that went public at a time and has held up. So great potential there. And, we believe that's a $10 billion plus company. We're very excited about the microbiome space, which is gut health and various forms of microbiome. And there, we're doing some very interesting collaborations with medical research organizations and hospitals in the US. We're finalizing that agreement, so I can't name them. Our recent investment we made is a very interesting French microbiome company that's being announced. It's called Exilium.
I've been ahead of the panel. We'll talk later about, some
so
of the specific.
I guess in terms of trends, we remain active. We're long-term investors. We're not compelled to deploy capital in a certain investment period, so we're pacing it out. We're obviously supporting existing portfolio companies with follow-on rounds as well.
Well, let's see. We have a more committed answer from the financial VC.
Yeah, I was going to say
that right now.
I think it's a little bit different for private VCs. We have sort of one KPI, which is make money. And if we don't do that, then people don't give us money again. So a lot of the time we need to think about what are the big opportunities we're seeing in the region. And when we think about the Middle East and Africa, there's 1.5 billion people who live across these markets. And, it's interesting to sit down and think, like, what are the biggest problems that we anticipate in the next few years? So across like the firm, people spend time looking at different sectors, and we're sector agnostic. And as VCs, you guys probably know this, we are sort of inundated with loads of information every day from different sources, loads of statistics, data, and loads of brilliant founders sharing their stories with us. And usually what captures my attention is like a number or, an idea that I hadn't thought about before. And that's like when I start to dig deep. And I think that the two verticals this year that I really spent quite a bit of time on have been healthcare, and then specifically preventative healthcare and longevity. And then secondly, supply chain tech and sort of local manufacturing capabilities and additive manufacturing specifically. And I'll start with longevity just really quickly, which was I wrote a piece about this as well because I was so interested in it. Whenever we think about healthcare, we think about disease care, which is the traditional way that, you know, in the US or, you know, in more developed healthcare markets, we treat people who get sick. And across our markets, I think the story that we've continued told is there's not enough doctors to meet the traditional disease model. So even if, you know, we wanted to treat people in our markets the same way, it wouldn't be possible. On top of that, across the Middle East and Africa, we have the highest burden of non-communicable diseases in the world, as well as, you know, in the region specifically, the highest instance of diabetes led and caused by obesity and other lifestyle-related illnesses. That was shocking to me. And when traditionally you think of longevity, you think of aliens and you think of freezing your head and then coming back to life a few years later. But the science of longevity is so much more interesting than that. And that's like where I've spent quite a bit of my time. There's huge potential in this region and in this market to focus on preventative healthcare and sort of stop people getting sick in the first place. And if we tap into younger and younger generations and change the way they think about their bodies and how they think about getting sick, and how they think about staying well, I think that we have like a real opportunity in the next 20 years to build a very, very different healthcare system. And that will be one of the companies that I talk to you about shortly. On the flip side of it, I grew up in the UAE and I spent most of my childhood and a large chunk of my life here. And I learned a few interesting things about global supply chain. So the first thing about global supply chain that I learned, and we put out like a 60-page report on this, it's on our website. If anyone has a lot of free time, please do read it. Some of it's interesting. 50% of all of the large freight forwarders in the world run their operations on Excel, which really blew my mind. I'm not talking about like a small e-commerce seller and how they send things to their customers. I'm talking about containers and containers and tons of items that get sent across the world that are worth a lot of money and very high stakes. I think that was the statistic that got me spending a bit more time thinking about how do we get our goods and services and how does supply chains work globally. The second bit of it related to me growing up here is I've always wondered why we never made much here, or why in the UAE, because we were so advantageously positioned in terms of a trade hub, that people, you know, continuously come in and out, where we have one of the most established ports in the world. But I think just given what's happened with COVID, given the risks to supply chains, there's like a massive opportunity here in the next few years around building like manufacturing capabilities and sort of decentralizing the supply chain a little bit more, and sort of leveraging the position that we've built in the region. So I'd say I would broadly agree with both of my other panelists on the venture trends that we're seeing, but two sectors I'm particularly excited about are healthcare and supply chain tech.
Great, thank you for sharing some ideas. There's always a point of view that actually adds to that question, because the reality is that the world is not only VCs, and the companies can get capital from many other players that can be very helpful. Okay, just to be a bit specific and ideally a bit brief too, so we can move on with the rest of the demo day. I ask you all to think about one company that is a recent investment that you are particularly excited, and let us know, well, what does the company do and why are you excited specifically about that company? So maybe we can just go the other direction.
Yeah, mine is a very clear follow-on from longevity and healthcare, and it's actually a co-investment with DFDF. So it's a company called Valeo, and what they offer is at-home blood testing and then personalized evidence-based supplements, essentially sort of changing the way, once again, as I mentioned, we think about wellness. So I think one of the most important changes we're going to see in consumer healthcare in the next 5 to 10 years is that it's going to become a lot more personalized, and patients are going to have access to a lot more data about themselves, and that prevention is going to become a much bigger part of it, right? So the reason we're excited about Valeo is like we see it as the first piece of the groundwork of that personalized, precise, and preventative medicine that's going to come to the region. Essentially what happens is a nurse comes to your house, takes a blood test, you get access to all of your results in the app. You can set it up as a subscription. So every 6 months, someone will come and do that. And in tandem, you'll get, you know, recommended a set of supplements to purchase to support just generally with your wellness. And once again, that kind of ties into the idea that you can sort of stop getting sick before it happens.
Good, thank you. Sharif, sorry that I cut you earlier, but what is the company? Tushar, sorry,
Yeah.
Tushar.
Yeah, so I rambled on there, but Exciting company we're just closing right now is a company called Exilium. It's a French company in the gut microbiome space. They're effectively creating a cure for, on the immuno-oncology side. And they have two disease indications, immuno-oncology and IBS. So I think what's unique is they're taking, and I don't want to get too technical here, but they're taking a single strain approach, which if it works, it's still very early stages, could, the efficacy could be significantly higher than, a consortia approach or a full spectrum approach. So it's technical, but really great founding team, amazing scientific talent. And I think what's most amazing is where they've got to in the most capital efficient way. Companies spend, 50, 80, 100 million. They've only spent 12 million to get where they are. And their manufacturing setup, which they figured out, because that's the biggest issue, how efficiently you can go through clinical trials. And then once you get that, how do you take it to the next phase? So that manufacturing and the supply setup they've had is truly remarkable. So yeah, that's an exciting company. I just want to chime in. I think supply chain tech is hugely interesting for us. We're, of course, in the ports and logistics business, and we're looking very actively at businesses who come in and do POCs. And one stat to add on, 60% of containers move empty globally. And, the supply chain problems in the last few years, there were containers being dumped because it's cheaper to bring the ship back rather than wait for containers to be emptied but it's going back to empty containers. And why? Because it's so inefficient. The largest shipping lines are just not. And what technology and potentially blockchain is a company which is building a blockchain solution for that can do to make, to enhance interconnectivity so you can, optimize efficiencies. Just imagine the impact of even 20% reduction in free containers floating around.
There's definitely a lot of inefficiency in many traditional industries and very clever ways where you can create a lot of value, reducing environmental impact, reduce costs, and make things more available just by adding a bit more digitization in a smart manner. Right now, Sharif.
So I've been thinking about this while they were talking. So I'll avoid the exciting healthcare startups that I wanted to talk about because they both talked about more on the bio side, healthcare side. And I'm also going to avoid fintech because I think we've all just probably talked about fintech too much in the last 2 years. But there's a company that we had IC approval on, but it's not announced yet. So I can't tell you the name of the company, but I'll tell you the technology of what they do. And to me, it's an example of how interesting you can create a very acute solution to a problem in an industry, even from these markets, even though the market could be global. So this company does essentially dubbing. So like when you see a movie, let's say a Turkish movie, but you see it in Arabic or in English or something like that, that takes 10 months or something to properly dub a movie. And it's extremely expensive and it requires a lot of manual work. And then at the end, the consumer, the consumer perception of that work is not very good. So you see all of that work and money, they put it into dub it into another language, took a lot of time, yet the experience is still pretty poor. And this company, building it here from Dubai, has built a technology-based dubbing using AI modeling, a neural network that they've created and they nurture themselves. And they're able to do what's called zero shot dubbing. So without any training on that person's voice, they can emulate one person's voice on another person in any dialect you want, in any language, in real time. So we thought, this is crazy. There's no way they're the first doing this out of Dubai. There must be somebody more sophisticated doing it somewhere else. So we couldn't find anybody doing it. So the amount of cost savings this will provide the content industry and content producers, which you see on Netflix here, you see on Disney Plus and stuff. It's really hard to get content syndicated across different languages and countries before today. And now they're able to do that at a fraction of the time. Instead of weeks and hours of that, it can be in minutes. They can dub an entire movie into a specific dialect. So you could open Netflix and essentially see a movie in the dialect of your choice even in India, let's say, you could see it in 50, 100 different dialects in India. And then because it's zero shot, it can just be produced in real time and published right away, or produced and published right away. The other thing that they're doing, but they have now put that on the back burner just to kind of hold on because they were launching too many technologies at once, was the lip syncing using AI as well. So it looks like, I mean, the clips that we were playing with were like Morgan Freeman speaking Arabic. We had Donald Trump speaking Arabic. We had Jason Calacanis, famous angel investor, speaking, I think, Hindi. And like, it was just, we were just having fun with it because you can do it all right there in real time as if you're just Google searching. That's how fast the tech is. So we thought that was really interesting. Yes, it's still a very early stage company, small team, but they're all engineers, which we liked a lot too.
Well, thank you very much for sharing the companies. Thank you very much for sharing your points of view of where are the opportunities. It's time to continue now. We have 5 more companies to go. So please, big applause for our panelists today.